Good morning, folks. It's Tim Davis coming to you guys with another video. There's so much action that's happening right now as we approach the June support level, is that we have to really pay attention to it, because even though we saw a big move downward on this week on Tuesday, that's nothing compared to what could happen if we break the June lows. And I'm going to point out this support level and show you how close we are, and show you some of the technicals that are showing us that this break of the June lows could be the beginning prefaces of another major move lower over the next week and a half or so, especially with the Fed meeting coming up on next week. So let me break down each one of these. I'm going to take a look at each individual indice on a daily chart, and then we're going to look at them on a weekly chart, and we're going to take a look at the VIX. So here is, and I want to point out something. So the solid line I have drawn here, solid white line I have drawn here, is a support level from the June lows. If it's a solid line, it also represents not only the support level for the June lows, but also the level of resistance that we've seen in 2020 before the major breakdown. So I'm going to expand this here in a few and show you what it looks like on a weekly chart. But looking at this right now, this is a daily chart of the Dow Jones futures. And as you can see, I'm gonna highlight this. Here is the big move we had down on Monday. This big red candle here. It was a big move we had down on Monday. And then since then, guess what? Markets are pretty much just not doing anything just yet. It's just, just hanging around the lows. I think eventually, either this week or sometime next week, there's going to be another catalyst that's going to cause price action and push back towards these June lows. And it could happen this week, and then we could, see something like this. We'll have to see how this pans out. But I think if the Fed doesn't find a way to get a rally in this market and get a huge bounce off of these June lows, I think we're going to punch right through these June lows. And what happens next could be very detrimental for the markets over the next month. We could see a huge move down in the markets. So I must point it out and show you how and why here in a second, and what that looks like for the future. But here is the June lows. Again, we are heading towards those June lows, folks. As you can see, that big move down on Monday, price action is hovering around the lows now, and the lows from Monday. And we are very close, very close. We got far to go before we get to that June support level. And price action doesn't get a huge bounce and ricochet off of that support level, which I don't expect to happen. I expect to see a move down, maybe a slight bounce, possibly, and then a continuation lower. So we're going to see how it pans out over the next week. And that's what the daily chart looks like on the Dow Jones E-minis. Again, this solid line you see me have on here represents the June lows, but if it's also a solid line, I'm going to show you guys what I did here. It's also a solid line. It also represents the highs of 2020, and I'm going to show you what that looks like in a more detrimental fashion on the weekly chart. So that now each indice looks the same. Let's take a look at the S&P E-minis. Here's the S&P E-minis. And there's a little gap between the June lows and the 2020 ultimate level of resistance / support that we broke down from in June. So the solid line again represents the highs of 2020 before the major breakdown, for the major collapse. And then this dashed line represents the June lows. So as you can see here again, at the SP minis, June lows, we got a bounce there, and looks like price action is headed back towards that direction. And if we don't get a bounce off of them June lows, we're going to be headed straight down through there and start to retest on that S&P. It'll start to retest the major level of resistance that price action ran into in around March, April of 2020 before major breakdown. That's what the S&P minis look like. Let's take a look at the Nasdaq. This is the Nasdaq futures. If I can get it to load up here. Okay, here we go. Nasdaq futures looks just like the S&P minis. There's a break between the June lows and the highs of 2020. That's why you have this dash. Why I have this dash line appearing in the solid line below, which represents the highs of 2020. Again, you see everything looks the same. This June low is definitely in jeopardy, folks, as we are trending in that direction. As you can see, we are trending in that direction. In the near term, we have not been able to take out that high point. So we have been creating these lower highs over the past month. And price actually is continuing to trickle lower. As we continue to trickle lower, these June lows definitely in jeopardy. So that's a June level of support. If we do not get a bounce there, again, which I really don't think we are, because there's so much negativity in our market right now. And right after we had that disappointing CPI print, it's speculation that the Fed is definitely going to go raising rates next week with the by 75 basis points, or some are even speculating it could go even higher. And the thing to watch out for next week, it's not really because the Fed is definitely going to raise rates at an astronomical amount sometime next week. But what we need to pay attention to is the minutes or the Fed's speech after that. How long, do they continue? Do they plan to continue to put to raise rates to get inflation under control, which a lot of folks think is going to be a lot bigger rates for a longer period of time. Markets are not going to like that, which is why I think these June lows could possibly be in store for a major breakdown of the support level and then start to head towards the highs of 2020. That's what I believe we could possibly see over the next week or so. Major breakdown of this level with price action heading lower. If we break those June lows, we're going to see probably another massive sell-off possibly. That's what the Nasdaq looks like. Take a look at the Russell 2000 E-minis futures. And again, if just at the solid line alone, I'm going to show you guys what that looks like on the weekly chart here in a second. Solid line alone represents not only the June support level, but also represents the highs of 2020. So with the Russell, and I think it was the Dow Jones, we break these June lows. We're also going to break the major level of resistance that we've seen in 2020. We're going to break back below that level like we did in 2020, and in 2020 after we broke this level of resistance, markets just plunged and just continued to go much lower quicker. So that's where we at. We're on the verge of actually seeing it unravel. So we have to see what happens over the next week and a half. If we do not get a bounce off of this level here, this level or prior to this, we can see a major breakdown of the support level and price action continue to head lower in a bigger way. Now let's take a look at the VIX before we switch over to a weekly chart of each one of these. Let's take a look at our VIX. The VIX has a perfect setup for the for a continuation higher. So here is the channel that the VIX has been trading in for the past, all year long, pretty much. As you can see, it's well defined. Every time we have got to this lower level, we trade around these lower level of this VIX for a while, and then we find a way to bounce. Trade around here for a while, then we find a way to bounce. And this is a longer term. We had this is the June lows, and we see June lows of the market. We had a long stretch of red until we finally got back down to this level support, and finally got this gap up here. And look what's happening. Now we are on a trajectory higher, so it's starting to create these higher lows. I don't think we're heading back to this level support anytime soon. I think we're going to continue to see this zigzag motion higher. I think eventually we're going to come up to test the upper band of this channel in the very, very near future. Right over there. Oh, before this year is out, we're going to test this upper channel, I believe. So with the VIX on a trajectory higher, we know that means what our markets, that means our markets are on a trajectory lower. So the VIX is really setting up for a major move. So folks, the bears are really starting to sink their teeth back into this market, folks. So do not be a hero and try to catch a falling knife because it will hurt your portfolio drastically. We are still in a bearish market, even though we had a nice little stretch, nice little run in June. From June until around about now, look what happened. A long stretch of red, you know what I'm saying, on the VIX. It's going to lead to a long stretch, probably a long stretch of green. And look how oversold the VIX got, folks. We were in, look at the wins, forecasters and wins percentage. We were in this oversold territory for quite a bit. Now we're finally out of the level, and I think we're going to stay out of this oversold territory level probably for a bit on this. This is a daily chart, I believe. Look at all this. Look at the wins percentage. We were in oversold territory for quite a bit. Now we're starting to bounce from this oversold level. RSI looks the same. And a significant gap up here. And I don't think there's a gap up here in the VIX. Normally, whenever 9 times out of 10, when there's a gap, that gap normally fills. And I don't think this gap is going to fill anytime soon, maybe for a very long time. So I think the VIX is definitely in this move higher for a lot longer. So the VIX is in upward trend. So that means overall markets in a downward trend. Now let's switch to a weekly chart. Start to look at the bigger picture. Now here's the bigger picture of the VIX on the weekly chart. And folks, I'm telling you, this is a big time setup. The last time we had a gap in the VIX like this, a gap up in the VIX on a weekly chart. You see this little gap here. I'm just circle that. So last time we had a nice size gap up, a little gap up in the VIX. Not a huge gap, but it's a big gap. I mean, it's a gap that's noticeable. Last time we had a small noticeable gap on a weekly chart of VIX. The VIX continued on a crazy move higher. When did we see that again? When did we see that recently? In 2020. 2020, here's a big gap up in the VIX. And after that gap up, look what happened to the VIX. The VIX just really took off in a major way. Could we be in store to see that type of move again? It's a huge possibility. Look at the oscillators on the weekly chart of the full stochastics. Look how deeply oversold we got. And look at this strong move out of oversold territory on this weekly chart. That's a strong move. These oscillators are like showing a lot of strength, heading higher. Wins percentage, same scenario. RSI starting to head higher, same scenario. So the weekly charts look extremely strong on the VIX. And look at, we're starting to get our first yellow bar on the TTM squeeze, signaling that the downward move is about to be over in a big way. It looks like the momentum is gaining steam to the upside for the VIX and on the bigger picture. While we're looking at the VIX weekly, I haven't looked at this yet. Let me just take a glance at the VIX monthly chart. So at one point, the VIX monthly chart was trying to head back lower, but it looks like it's about to be stalled. That move lower, it's about to be stalled on a monthly chart as well of the VIX. So the VIX was on a nice trajectory up, and we started to curl over a little bit in June, and I think this is going to come right back up, folks. We're about to see the VIX monthly charts really start to take off. So I think we're going to be in store for, probably going to be in store for a heck of an ending to 2022 in favor of the bears, probably in a big way, as we head towards the end of this year and the beginning of 2023. I think the bears are going to take full control of this market, folks. That's just my ultimate guess, and I think we're definitely going to see a move up towards the higher level of this channel that the VIX has been in for a minute. All right, now let's switch back to a weekly chart and show you what's happening with the overall markets. on the longer term. All right, Dow Jones E-minis. This is what a weekly chart looks like. So here is what I was saying about the solid line, the solid trend line that I drew. This solid trend line that I drew represents, here we go. That was the resistance. It was resistance. It was a resistance level in 2020, and we hit that level, and look what happened. Could not get above it, and we just plunged for about a month straight. Former resistance becomes support. Okay, so that means this year we tested that level. We tested that level several times already. So former resistance, which was resistance over here, now becomes support on the way back down. So we got to, we pretty much been hovering around that support level for that level for quite a bit, using it as a level of support. So pretty much between June and July, we hit that level, got a bounce, and now look what's happening. We are ready to test it again, folks. I don't think we're going to, continue to be lucky and continue to get bounces here, because the bounce if you look at the overall, the bigger picture, even if those June lows, that bounce off of June look pretty good, look good, but look at the strength, folks. It was really weak. It didn't go but so high. Look at that. It didn't go but so high. We couldn't take out the highs that we've seen of last year. We could only go up for so high, hit this support level up here. This resistance level here, came right back down. So the least path of resistance, it looks to be lower, and I think this level is going to be broken on the Dow Jones E-minis, and I think it's going to be broken very, very soon. And again, that solid line represents the highs of 2020. So once we break the support level on the Dow Jones, we break June lows of the Dow Jones, and June lows we saw, we're going to start to be in the area of the downtrend of 2020. And again, if you've been following me for a while, I think ultimately, for this bear market decides to see what it's going to do next, I think we're going to test the lows of about 2020 eventually. Now, it's not going to happen immediately. It's not going to happen overnight, but I do think we're going to start to break down below the June lows that we saw, that June support level. And once we break this level, we'll probably see something like, it's going to be a zigzag motion and maybe a drop below this level quite a bit, and possibly not go all the way down to the 2020 lows immediately. But I think we're going to break this level of support we saw test in June, and maybe get a rally back up to this level, that which may last, who knows, and then break that low and continue high. So it's going to be a zigzag motion once we break below this level of support we've seen in June, and then possibly running back up to test it as a level of resistance, and then head lower again. So that's what I expect to see over the coming weeks and months, is to break that June low, probably in a big way, then possibly rally back up for a test, then come right back down. So the bears are definitely in control of this market, folks. Don't be fooled by these low rallies we see. Bears are in control of this market. Take a look at the S&P weekly chart, same scenario, except there's a little space between the June level support and the 2020 highs. So there's a little gap here, but I think that gap is not going to matter. I think eventually, if we break the June lows here, we're going to head straight down to the highs of 2020 and possibly run right through that as well, even on the S&P. Taking a look at the Nasdaq weekly chart. Same case scenario. Possibly a retest of the support level we've seen in June of 2020. And then next, the breakdown below that level of June 2020, June of this year, 2022, then head straight to the highs of 2020, and then possibly break that level and head lower in a big way. So this next week and a half is going to be crucial for our markets, folks. So don't try to be a hero and catch this falling knife, because it can sting in a big way. You can always make money in this market going down, folks. So find a way to trade this market on the downside, however you do it, whether you do it by shorting the market or with put spreads or put options, whatever you do to trade this market on the downside, probably your best bet to see some type of gains in your portfolio. And the Russell weekly chart, it is the closest to the June level of support and the 2020 level of resistance. So it's right there. So we're probably going to see the Russell break down first. So that's something to watch out for. All right, so that's what I wanted to share with you guys. This next week and a half is probably going to be extremely crucial for the overall markets, and we could see another major breakdown. I think Monday was something we probably ain't seen nothing yet. Probably going to see much lower prices over the coming weeks or so. And one last glance at the S&P. We're going to look at even a bigger picture. Monthly chart of the S&P. It's just hovering around these lows for. I mean, we are hovering around a level, strong level of support. And if we break down, we could see us going to deep oversold territory on a monthly chart. In other words, what I mean is that you see our oscillators down here on the month, and this could last for years. If we get to oversold territory on the monthly chart, which meaning seeing the full stochastics drop below this lower line on a monthly, full stochastics come back below this lower line on the wins percentage, and then eventually RSI, you see an RSI drop, and that could happen in 2023. Drop below that 30 level on the monthly chart. That's devastating. That would be devastating for our markets, folks. That means we are definitely that we see that happen. We definitely probably be in a deep recession. Sometime in 2023, we start to see RSI break below the 30 level on a monthly chart. That would be very impressive and probably be historical. All right, folks. So that is what we look like. Wanted to break all this down and show you guys what the possibilities are. Be vigilant, be vigilant, be nimble, be quick. And remember, you can always make money on the downside. All right. Until the next video, I'll be signing off, folks.